When my clients inherited her parents' Ventura County home, a home worth about $800,000, her CPA told her she was going to owe roughly $180,000 in capital gain taxes. She panicked. Her siblings were panicked. The whole family thought they were about to lose a huge portion of their parents' legacy and their inheritance. But using one California tax rule that most people barely understand, we got that tax bill all the way down to $0. And in this video, I'm going to walk you through the exact 3-step strategy we used, the documentation I helped them gather, and how this works whether your inherited home is worth $400,000 or $4 million. Before we dive deeper, I want to make something clear. This is educational content, not legal or tax advice. Every family situation is a little different, and you should always consult with your CPA, tax professional, or estate attorney for your specific circumstances. I'm a licensed California real estate agent, and a big part of what I do is help coordinate all of these professionals, the CPA, the probate attorney, the appraiser, so you're not trying to figure everything out on your own. As your real estate agent, I bring everyone together and guide you through each step so you can make confident decisions without feeling overwhelmed. A lot of families I talk to, especially here in Ventura and LA County, start off believing the same thing. My parents bought this home decades ago. It's worth so much more now. We're going to get crushed with taxes. Let's walk through why everyone thinks that. Your parents might have bought their home in the 80s for around $200,000. Fast forward to today, maybe it's worth around $800,000. That's a $600,000 increase in value, right? So the traditional thinking goes $600,000 in gain times 30% combined tax rate, that equals $180,000 owed. And that is exactly why families panic. It's why siblings fight. It's why people sell too quickly or make emotional decisions that cost them money. But here's what a lot of CPAs don't mention. And honestly, it's the part that can change everything. That entire calculation is wrong for inherited property. If you sell an inherited home without knowing how this works, you may end up paying taxes you don't even legally owe. So here's the simple game-changing truth. When you inherit a home, the IRS gives you something called a step up in basis. And what that means is that the taxable cost of the home resets to the market value on the date your loved one passed away. So instead of having your parents' original $200,000 cost basis, your basis becomes the $800,000 value as of the date of death. Now, let's look at what that means financially. If you sell the home for $800,000, $800,000 sale price minus $800,000 basis means zero taxable gain. And that's why my client owed absolutely nothing. She didn't get lucky. She just used the rules correctly. Here's something really important though. And this part right here saved my clients over $40,000. To use the step-up basis correctly, you need a professional appraisal that shows the home's value on the date of death. A Zillow estimate doesn't count. A Redfin estimate doesn't count. The IRS wants a real appraisal. When I work with families on inherited homes, this is one of the first things that we order, because it protects you financially and it makes everything clean and simple for your CPA later on. Let's compare both scenarios so it really sinks in. Without the step up, you owe taxes on about $600,000 of gain. With the step up, you owe nothing because your basis equals the home's value. And this applies to every inherited property in California, Ventura County, LA County, anywhere. It could be for single family homes. It could be for condos, multiple units. All of them count. Now, I need to clear up the biggest source of confusion that I see going around online. Step-up basis affects your federal income tax. Well, Prop 19, completely separate, affects your property tax in California. So let's simplify it. Step-up basis prevents you from paying capital gain taxes on value that built up during your parents' lifetime. Prop 19 determines whether the property taxes get reassessed when you inherit the home. If you inherit a property and you don't move into it as your primary residence, the county can reassess your parents' low tax base to today's market value. So yes, you might avoid the $180,000 capital gains bill, but your property taxes could jump from $2,500 a year to $800,000 a year now. That's why real estate, taxes, and inheritance are so intertwined and why it's so important to understand both sides. I have a full video explaining Prop 19 strategies in detail, so I'll link that below if you want to dive deeper into that part. But for right now, we're focusing on how to avoid capital gains that you don't owe. And the big question families ask is whether the home being in a trust versus through probate changes anything. And here's the answer. The step-up basis applies the same either way. The difference is the timeline. If the property was in a trust, it usually transfers almost immediately. You can typically sell within 30 to 60 days after gathering all the documentation. And the step-up basis applies as of the date of death. If the property goes through probate, that's where things start to slow down. Probate can take anywhere from 9 to 18 months here in Ventura County and sometimes even longer in LA County. And you can't sell the property until the court gives you permission. But your step-up basis still applies on the date of death, not when probate finishes. Here's where families make a costly mistake. If the home appreciates after the date of death, that new gain can be taxable. So if the home was valued at $800,000 when you inherited it and you end up selling it 2 years later for $900,000, that extra $100,000 could be taxable. Not the end of the world, right? But good to know early on so you're not surprised later. Let's talk about the documents you're going to need because this trips people up too. You're going to need certified copies of the death certificate, a professional appraisal tied to the date of death, trust documents if there's a trust, or letters testamentary from the probate court if you're going through probate. And then your CPA will use IRS Form 8949 to actually report the capital gains or the lack of them. Most families have no idea where to find half of this, and that's normal. You shouldn't have to figure this all out alone. Let me give you a simple checklist to follow if you just inherited a home. Get multiple certified copies of the death certificate. Order a professional appraisal within the first 60 days and file the necessary forms with the county assessor. Talk to a CPA about the tax implications and decide whether you want to sell the home or keep it. Let's talk about that decision for a second because it's not always obvious. You should consider selling the home if you don't need the property long-term or the market is strong, or you may want to avoid a big property tax jump under Prop 19. Or you may even need the funds to settle the estate and to divide the assets. Or you might want to consider keeping the property if you want to live in the home, or maybe the rental income will comfortably cover your expenses, or maybe the home has significant personal or family meaning. Let me share one more bonus strategy that most people don't know. If you move into the inherited home and live there for at least 2 years, you may qualify for the $250,000 to $500,000 primary residence capital gain exclusion on future gains when you sell. This is on top of your step-up basis. So used together for the right family, it can be incredibly powerful. And again, everything in this video is meant to be educational. This is not legal or tax advice. Your situation may have unique details, so always consult with licensed professionals. As a licensed California real estate agent, my role is to help coordinate the entire team, the probate attorney, the CPA, the appraiser, so you're supported from every angle. If you're dealing with an inherited property in Ventura or LA County, this is what I help families with every single week. I specialize in inherited homes, probate sales, senior transitions, Prop 19 guidance, and helping families make confident decisions without the overwhelm. I also work directly with probate attorneys and CPAs and appraisers, so you don't have to navigate all of this by yourself. I offer a free inherited property consultation where we go over your situation step by step, create a clear timeline, and look at whether selling, keeping it as a rental, or moving makes the most sense for your family and the property. You can schedule that call using the link in the description. If you found this video helpful, go ahead and tap the like button so more families can find this information. And make sure to subscribe. I release weekly videos that simplify inherited real estate, probate, Prop 19, downsizing, and protecting your family's home. And if you or someone you know just inherited a property in Ventura or LA County, click the video appearing on your screen to keep learning, and I'll see you in the next video.